Please welcome Vice President Americas Tourism Economics, Zeek Coleman.
Ooh, those lights are bright. Thank you. It's a privilege to be here. I look a lot better on that picture. We're going to talk about drivers and roadblocks. We're going to talk about where we're going to go from here. And our company deals with the intersection between travel and the economy. But before I begin, you may be wondering, is this dude a linebacker or an economist, and why should I listen to him? So I'm going to go over a few slides real quick on our firm. So we are an Oxford economics firm, and namely, we've won a bunch of awards, and I'll highlight one of those. And there's some highly recognizable names here: Citigroup, JP Morgan, Moody Analytics, and this is a look at our analysis and our accuracy. Now, tourism economics handles the travel practice for Oxford globally, so we look at everything from Google and Alphabet, TripAdvisor, Booking Holdings. They count on us for their analysis, and even Live Nation. We actually did a study for Live Nation on the impact of Beyonce's tour, and I just like that picture because I don't know why that guy did that. But if Beyonce trusts us, then you can trust me when I'm up here. You will have access to this. You won't have time to scan it right now. I just want to show you that because I'm about to go super fast because I got 15 minutes to give you 25 minutes worth of data. All right, so where do we go from here? We're going to answer this by asking a few other questions. Namely, we'll look back a little bit. How did we even get here? What happened in 24? And should we be optimistic about 25? And I have some mixed feelings on that. So we'll take a trip down memory lane data-wise and look at consumers' sentiment. So consumers were feeling uneasy despite great job numbers in 2023. And it's about as dark as it was during the 2008-2009 financial crisis. And the reason was inflation. Now, these are normal economic conditions, but what happened right before that mountain of inflation to cause that spike? What happened? Something happened in our world. Not COVID, though. The response, what was it? Spending. Yeah, we got stimmies. Everybody was balling. We got a bunch of money. And if you weren't self-righteous, you used your stimmies to do all kind of stuff. I don't know what you did with yours, but I'm more like this guy going to PetSmart and asking, y'all got any tigers in here? Feel rich with the stimmies. For context, if you had, for my fellow C students, if you had a $100,000 salary and you got $111,000, you could still only buy $100,000 worth of pre-inflation stuff. So that was a problem, except if you're in Alabama, you're still living off that money right now. Sorry I'm from Alabama, so I can say that. So what happened in 24? A lot of stuff, right? There was, for those of you complaining about the halftime show, this is why that happened, okay? Talk to me later, I'll explain more. We all discovered women's basketball. That was fun. The president did some interesting things, This is the point where I just give a disclaimer and say, I am trying to not seem political. I'm trying to be apolitical. And as it relates, politics, I go both ways, politics. And so I have voted and done things that I am not proud of. But my hope is that you wouldn't know who I voted for, because it doesn't matter. At the end of the day, we want to look at the data and answer questions. So travel growth flatlined in 2024. This is a look at our dashboard for US travel, where at the top you're looking at travel spending and air passenger count, and you'll notice those numbers are getting smaller from left to right as the year goes on. So that's year-over-year growth, and it's shrinking. Now look in the middle at the hotel demand. Also flat to down for most of the year. Now, if you look at this one, you'll see that those decreases were led by economy and mid-scale. So that's where the contraction is happening. This bifurcation or division of our travel economy, you're gonna see through the rest of the data as I show you these other slides. Despite this, travel continued to thrive. We had almost 1 billion passengers come through TSA last year. Hotel demand was at 99% of 2019, but that's a little misleading too. So check this out. So that's total lodging, but that's propped up by short-term rental and cruise cabin nights. That's hotel room nights right there. And so the hoteliers in the room right now are feeling kind of sick. You guys remember this moment? It's really not a good moment. So that light blue right there, that is the same data, but just kind of look at it compared to the 2019. Hoteliers are also feeling like I'm about to get up and smack this dude. So let's look at the economy. Let's look at the economic outlook. Unemployment remains low. That's good. It's about as low as it was dating back to the 70s, except in federal work. These are unemployment claims for federal workers, and so there's a reason for that. In fairness, though, I asked our chief U.S. economist, like, dude, is this significant? And he said, it's about 2% of all of our workforce, and the amount that was laid off is largely not going to impact the labor numbers. So you like Trump Salt Bay, somebody? Yeah. People are hanging on to their jobs. So this is a look back, if you kind of think, in 2020, obviously everyone lost their job. That's that dip right there. But then that spike, that's the red line is the quit rate, so people quitting their jobs. The blue line, that's wages. And so people were quitting to go get higher wages. Well, that stopped as we were heading toward a recession. People said, I'm staying my butt in this job for stability. I gotta stay safe. And so that's an indicator, and people are still hanging on to their jobs. Now, this is the latest inflation data, and the goal was to get to that yellow line, right? And we were getting there. We were going, and we were excited, and now it's kind of like plateaued, and we don't really know. And egg prices are like, I'm over this. And tariffs pose significant risk to supply chains. So this is a look at the last time this administration was in power. And at the start of the US-China trade war, it was, the things that were tariffed are the red line. That's not good. And this latest inflation data does not even show or reflect the effect of tariffs. So that spike right there is without that impact, and we have yet to see what's going to happen once that actually hits in April. The Fed is going to hold rates higher for longer, and so obviously when inflation is a potential risk, they're not going to loosen their monetary policy. And so if you're looking to buy a home and you're hoping interest rates don't go higher, they're getting higher. Now this noisy chart, I like this chart, but I don't like all of it. So that line in the middle is obviously, that's just neutral. Everything below the line, the light blue, that's bad. Everything above the line is good. And so that big dip, that light blue, that's tariff increases in immigration policy. So you don't have the same affordable labor, and you have a trade war. That's inflationary. Those are going to be offset by tax cuts in 2 years, the extension of the tax cuts. But could you just imagine if we didn't have tariffs? I mean, I don't know why would we do that? Anyway, economic growth will slow markedly in 2025, and so we were forecasting 2.6%. We've just revised that down to 2%, and we'll see where we end up with that. All right, now we're going to look at travel. So we'll look at travel data, and it's not all doom and gloom. Yes, there are some negatives. Yes, there's a lot of uncertainty, but there are some positive. Before we get there, it is noteworthy that consumer sentiment has just taken a dip, maybe a nosedive, and so I'm also confused, Joe. Don't know why the tariffs. Anyway. Somebody's really tickled over there with that. Wage growth is pacing ahead of inflation, and I know you're probably thinking like, no, it's not. It doesn't feel like it, but it actually is, and that's positive. And household net worth is up. It's cheaper to have your debt. These are all strong things that if I have money, if I feel confident about my retirement, if I feel confident about my future, I'm going to spend, and especially on travel. And there's a lot of data that we have sentiment-wise, at least prior to all this, that says that people prioritize it above everything. This is a look at net worth across the income percentile, and so everybody did well, even on the lower end. But here's where you see that bifurcation as well. Obviously, those in the middle kind of got shafted. These are the intentions of people. When you ask them over the next 6 months, how excited are you about travel? How much are you planning to travel? And it's generally up when you go on the upper income end of things. And so that's all positive. I'm gonna speed up a little bit. This is good news for the hoteliers in the room. So higher income households account for 60% of all hotel spending. So that's really, really good news when you think about who's gonna have the capacity, the ability to actually get out and book rooms, book room nights. Some say money can't buy happiness, but it can buy you quite a bit. So here's the bifurcation evident in hotel performance again. So hotel room demand last year versus the prior year, it's up on luxury, upper upscale, and upper mid-scale. We're actually forecasting all of them will grow this year, but you can definitely see what was happening there. This question is fascinating. So when asked, what is the maximum you would spend on leisure travel over the next 12 months? They're still at about $6,000. That's significant. And that is as of February. I know it's probably hard to see up there, but February 2025. So that's good news. People feel good about travel. But travelers are pulling back. This is from Delta Airlines, and they were much more positive on their earnings call about 3 months ago. But they said in the face of the amount of macro uncertainty that's out there, I think people are cautious and they're pulling back a little bit on travel. And then United said, big drop in Canadian traffic to go into the US. Some of it is going to come out in government markets where we've seen less demand. Now, one positive was cruising. Again, cruising's doing really well. Momentum continues in 2025 with bookings accelerating since the last earnings call, resulting in the best 5 weeks in the company's history. Bookings have continued to outpace last year across all key products. And so that's kind of where the big dogs are and what they feel. That's always interesting for us to look at. Now we'll look at some international. This will be helpful, right? Because we're gonna look at the last time the administration was in office. So one of the things that you can note is in the red, that's 2014 to 2016. The blue is 2017 to 2019. And China, inbound from China fell 7% over that period compared to 63% growth in the prior 3 years. One thing I don't have a chart of, but I'll just explain, is that the travel ban around that same time only impacted demand by like 0.7%, but directly from those countries, but adjacent countries, I think it fell by like 18 points or something like that, something crazy. So it was a sentiment thing. People felt like, hey, you don't want us here, and so even though I'm not banned, I'm not coming. Similar things can happen when you have trade wars where you see in Canada what's happening, and I'll just go to that. But this is our revision. So our baseline showed 9% growth for travel. We now show 5% contraction, and a big part of that is this. And in the words of Ron Burgundy, that escalated quickly. So, we were doing really well, we were excited, and it fell. And I think I know the moment that this happened. I found myself like, yeah, get him, and then thinking like, no, travel. I need you to travel to pay my bills, so please don't get him. And here's another look at that data. So this is room demand loss in Canada. I've tried to put a box around. Big chunk. Canada and Mexico are those two at the bottom. Big chunk of the decline that we're seeing. So, can it turn around? I guess it could. Do we think it will? Who knows? And that's really the challenge is the uncertainty, because there are mixed messages coming from the administration where you would think travel's important, the economy is important, we want to support travel, and yet there are these actions that seem to, sort of stand in the face of that doing well. So now let's look at some business and group travel data. And again, sentiment data, planning business travel over the next 6 months, all on the rise, especially on the lower end. Business uncertainty does pose a major risk. That spiked. And but group room demand was on its way back. And so in 2024, group room demand actually recovered. It beat 2019. And then when looking at luxury, I thought this was interesting. So this is luxury group room demand. 2 months actually surpassed 2019, and then just about every month surpassed 2023. The growth was phenomenal. Do we think that's gonna continue? I don't know, but here are some earnings calls. So Marriott said group is still very strong with revenues for 2025 pacing up 7%. Again, that's back in November. They were doing very well. IHG said most of our corporates are saying they're going to increase travel overall. That's very positive back in October. And then Delta said our recent corporate survey indicates a positive outlook for business demand. 85% of respondents saying they expect travel to grow. So I know you're thinking, yeah, right. You're probably right? Like that sentiment is probably going to change in the next couple earnings calls as we see them. I did pull up data for the top 25, markets versus 2019. Only 6 of them surpassed 2019. I wonder, do these names surprise you, or any of these, any of those on the bottom end kind of surprising to you? Again, you'll have access to this, but that's just something to consider and to think about. All right, I went faster than I thought. Let's look at RevPAR growth, and one thing I'll say, so there will be a QR code up after this, but if you have questions and if you want to dig deeper and get our latest on the economy, apart from travel, my colleague Mickey is right there, and he can help you to get that. We'll give it to you for free. So Mickey, tell George I said it was free. But definitely talk to Mickey and he can give you some of this. But this is our forecast, and it's revised. So RevPAR growth at 1.8% next year. And this is a closer look at that. Demand, we're expecting growth still, ADR and RevPAR. And the strongest gains, again, that bifurcation is in luxury and upper upscale. So that tells you a bit about where the market is going. In conclusion, from a leisure perspective, consumers are in a good place, but they're not sure, they're uncertain. If inflation ticks back up or stalls, that's gonna, hinder the Fed. They're not gonna wanna lower rates, and it'll be a big uncertain mess. So that's an issue, but generally people are in a good spot. I mean, and the wealthy, they account for most of hotel spending, and they are gonna travel provided things don't get worse. So there's some uncertainty, but generally we feel good. Internationally, we're forecasting a 5% contraction. So that's not good. If you're heavily reliant on that business, be warned. The dollar's strong, sentiment is not great with Canada, US, so that's an issue. And then business-wise, as far as the eye can see, we feel pretty strong about that. We think, businesses are still gonna send their teams out. That could change. We're still kind of watching things. I know that it was not as funny as I was hoping it would be, but thank you for bearing with me. And feel free to download the slides from this link. Thank you.